Hey traders from around the world, it's me, Jeremy Alexander Newsome with reallifetrading.com. I trust you are doing most splendid. Here we got the SPY on the board, and the SPY, boy oh boy. A little bit of a pullback today, another 2.5% down day, just volatility rampant, which is fantastic for day traders. A lot of traders made some really good money today. So this blue line is Mr. Squiggles thinking that we actually do get this pullback today. I mean, that make tons of sense. Huge bullish candle on Wednesday. You got a gap up on Thursday. And even though this candle was related to the Trump stuff, I mean, I'm looking at these candles, I'm just saying, yeah, makes sense, right? Been volatile. Why not pull back down and then potentially bounce? So my thought is we do bounce here. Again, we by no means have to. But here's the weekly chart. And the weekly, what's a little bit concerning about the weekly chart is we do have a new black crow candle here on the weekly time frame, right? So it makes sense if we take out the low, or specifically if we close below 253 at any point in time, we're definitely going to go lower. But my overall thought on the SPY, if I just come back to here, here's my my three lines back on March 23rd. So kind of catapult back from there. It makes sense that this is where we're going. And I mentioned that we'd have one of these two things. I think we're still in the blue. I think the blue line makes the most sense. So we're just kind of chopping around for a slow rollover. We won't dramatically drop super fast, but we probably will slowly creep down, maybe break 253, chop around, and then eventually go a little bit higher. So we'll just end up seeing, but at this particular point, here's the hourly chart. And looking at the hourly, this could also easily end up becoming an inverted head and shoulders pattern. So something like this, right? Where we kind of start trading up higher. I mean, this is a nice support level for us to bounce off of. So time will tell. But again, this pullback today does make a lot of sense. Let me go show you the three trades we took today. NKTR was the one that we played. Blake Anderson called it out officially in the morning. This was a nice little retest gap, black candle gapping down. Here is the support right here, and this is the 5-minute chart. Pretty easy little setup. Here's the 5-minute, and the way we played it, at least in the morning room, was as it was breaking down, took out this support, and that's how Blake played it bearish. Me personally, I went with the rollover here, with the stop up here, and exited half of the position right there, and then had my stop right there and got trailed out for about 1.7 Rs on NKTR. And then target, ticker symbol TGT. This is one I was looking at yesterday in the afternoon swing trading room. And if I turn on the drawings, this was my setup this morning. And I exited out for half an hour because I realized how big my stop was. Figured we probably would not get to 2 Rs on the trade. And I was comfortable with a half an hour. So I actually got out almost at the exact high of the day, because most bullish trades, right? This is it. That was the bullish thrust. That's pretty much all you're going to get in that movement. And so took a half an hour on target, which put me at 2.2 Rs for the day. And then somehow the bear trap got me on Citigroup, which I'm a little sad about, but you know, I guess I will live. Here's the extended hours on Citigroup, and I'll look at this daily chart in a second. Pre-market low, low of the day, breakdown, retest. So I got in bearish here. My stop was right there. Got stopped out like 10 minutes later, only for it to roll right over into my 2 Rs. So a little annoying, but that does happen. There's nothing you can do about it. You can be the best day trader in the world, and you're absolutely going to get whipsawed out of trades like that. Here is the daily chart on Citigroup, and we just had a very nice white candle gapping down. It's a bearish gap and go. No real support in the way, right? So, you know, long terms, dailies, nothing. So the 5-minute, I mean, if you played the breakdown or played this double top, hopefully you had a really good day trading opportunities today. There was a lot of them out there. Micron Technologies, ticker symbol MU. Here's the daily chart on Micron Technologies, and still got an April $44 put sale. So that expires in 2 weeks, which I really do not mind owning shares of Micron down there if it does occur, since it was at 64 just 2 weeks ago. So I mean, you're getting it at a pretty massive discount. 100 simples here at $46.77, 200 simples at $40.66. Gonna let it trade sideways, but realistically on a weekly chart, it does make sense to me, at least, that this is some type of corrective, you know, wave 4 of some kind. breakout, and this is also a retest of old resistance, new support. So again, put sale at 44. 2 weeks left on it. We'll see what happens. But here's the 5-minute chart, and a few traders were able to play Micron technology today. So let me actually turn off the extended hours chart. So here's the setup that I posted. Also posted this one on TradingView and everywhere else. Just missed it by seconds. So there's the support right there. Nice bullish candle came in at that support, and as it broke down, retested and continued lower. That was the trade that I wanted to take, and just missed it by about 5 minutes. After it broke down, it never retested a second time. So small miss out there on Micron, but ending the day at 1.2 Rs to put me at 3.4 Rs for the month of April. So just slowly clawing the way to profits. Here's Lulu. And we are still in a swing trade on Lulu, and we're still up on that. I love the gap, love the trend, that looks nice. Here's Amazon, AMZN, and this was a wager that I had on Amazon that it would hit the 100 simple before earnings. Very nice bearish gap on Amazon today. Here's the 15-minute chart, and I'm looking for Amazon to maybe slash potentially, here's the hourly, retest this 1430 level, maybe Monday. As long as the markets don't have a huge gap up on Monday, I'll leave this open, but I might end up canceling it. I think Amazon ends up rolling over, though, again, and trading down to that 200 simple. This is a pretty bearish gap on Amazon after a gap up like that. So I'm watching Amazon continue a little bit lower. Now, I did have some requests for today, so let's go look at those. Here's Facebook, ticker symbol FB. Facebook still chopping around. Very nice inside day candle. And really what we have here is just a small channel on the 15-minute chart. So if I pull up the 15-minute, just hide all these drawings for a second and just do something like this, you'll notice very nice support area down here and resistance area down here. So as Facebook gets up to the 160 level, look to go bearish. As it gets down to the 151 level, look for it to go bullish. It appears to me that we could just roll right back down to that price range. And then again, if we get down to the 150 area, look to buy the dip. And of course, as long as Facebook does not close below 149.21, I'll remain a little bit more bullish on it than bearish, but I could see it slightly making and filling that retest gap overall. Apple is it sideways as an armadillo in Texas. I also had a little bit of a bearish gap down today, as most of the market did, but it is stuck right in the middle of the long-term moving averages. And of course, the 50 EMA on a weekly chart is at 160.30. A little bit of a high wave candle this week, so I'm interested to see what happens. But really, very, very flat on Apple. Just hanging out, letting it do its thing, seeing what happens from here. This was another request. AGNC Investments pays dividends. Here's the weekly chart, very sideways. I think my buddy Nick was getting into this trade longer term. So this is the monthly, and it is getting down here as far as just where it was or how low it has gotten before. If I just turn a line chart on, something like this, you'll notice we got some kind of support around the $16 price range. So yeah, if you're looking at adding to this particular trade longer term, I mean, it's a buy low, sell high level. I don't think it'll do anything exciting, since more or less when it IPO'd 10 years ago, it's exactly the same price it is now, which is the epitome of sideways. But yeah, buy low, sell high, accumulate, don't expect anything exciting of it. That's pretty much my thoughts on AGNC. Here's AMD. And AMD, I did post a chart on this one yesterday, expecting it to do pretty much what it's doing right now, which is roll over and then bounce one more time, potentially, as long as AMD and the general market doesn't close below Wednesday's candle, which I don't expect it to, but it always could, right? One candle can change everything, including your life. So if AMD closes below Wednesday's candle, I'm definitely not going to be bullish on it. Here's the weekly, and we've broken the 100 simple on a weekly. A little bit of a lower shadow. I like the lower shadow. This is either going to be a big correction, big corrective wave 4 of some kind, or it's a distribution phase like multi-top, and we actually break and go lower. Which one's it going to be? Well, we're going to find out within a few weeks or months on AMD. So keep your eyes peeled on that one. I will definitely be keeping eyes on it. Here's Hibbett Sports, HIBB. My buddy Seymour requesting this one. Here's the daily chart on Hibbett Sports. And if you're looking at the daily, it does appear that it's going to try to break out relatively soon. Nice support here, nice resistance there. We're just hanging out, and we're above all the moving averages on a daily chart. Again, if I come back to the weekly though, you do that 100 simple on a weekly at 27.65, which is going to be a small hang up. So let me go look at Hibbett again. What was that, 27.65? So if I zoom in here to the daily chart, I would really want to see, because of that, again, nice little pennant pattern. I like a breakout, make a higher high, and then buy the dip pretty much where it is now. Once it's proven that it's going to go higher, and just buy that pullback on Hibbett Sport. That's kind of my thoughts, at least on that one. Had another trader request, ATHX, which is a little bit of a cheaper stock. This one's very flat, trading insanely sideways. Here's the weekly, and yeah, nothing exciting on this one at all. Bottom line, if you're playing this one, it's a little bit of a cheapie. Find a good support, buy it at that support. When it goes up to that resistance, sell it at that resistance. It's not doing anything spectacularly wonderful. It's obviously a little bit volatile. If you can get enough shares of it at a good price, you can make some money with this for sure. So I would say my thought process, just based on that support, $1.34 makes the most sense on ATHX. And last but not least for today is Fossil, F-O-S-L. Fossil's an interesting stock because it did have a very nice gap action. Retest gap right here, white candle gapping up, and this really, all of this is the retest. This stock is actually kind of comical. Check out this monthly time frame. This stock was at $130 a share just not too long ago, back in 2012, and now it's at 14, getting wrecked. So there's a little bit of a support here at 1136, which we're working on breaking out of. They're getting some good volume down here. So it's just a little bit of a speculative accumulation, but it is above all the moving averages on a weekly chart. So, I mean, if it pulled back to 1369, it makes sense. This is a retail stock, and I can absolutely see why you can make some arguments to be bullish on this one without question. Just know that accumulation phases, when you're buying as low as something like this, they can take a very long time. So just expect it to chop around and trade sideways for a while, and really just get an idea of when to buy that dip. And really the dip would come in with this little neckline retest right there at about 13 bucks. If it pulls back down to that, I think it could be buyable, or the 50. But really in this situation, you'd probably, instead of using stops, you'd be more inclined to potentially using protective puts, as that'll protect you from whipsaws. As more than likely in an accumulation phase, it really will chop around, trade sideways for a while. So if you want to trade the stock longer term, I'd probably use protective puts rather than just stops in general. But if you're looking at buying a dip, I think you could try half of an R at 13 bucks and then half an R at $12 and put a nice stop down here at 10 and just get a little bit of room to wiggle. A lot of fun stuff coming out this weekend and next week. Keep in mind, the Wealth 365 Summit is approaching again next week. It starts on Monday, and then I will be hosting a back trading event on the 13th at 2 p.m. Eastern Standard Time. And then the very next day, Saturday, I got a really special event coming up for traders from all over the world. It's a back trading marathon. More information on that very soon, but keep your inboxes peeled. I'm about to be sending you all kinds of links and videos and information. It's all going to be enriching. It's all going to enrich lives, and I appreciate your time, energy, splendor, splendidly. You are fantastic, and I will see you all on Monday for your next free real life stock review. And until next time, remember, love life, live life, and trade it. Enjoy your weekend. Bye.